Welcome to Ben Talks Money. Here we discuss stocks, investments, ETFs, and personal finance.
Hello there, welcome back to Ben Talks Money. My name is Ben. I have an MBA in Finance and Management. I've been trading for 8 years, and I'm a full-time options trader. If you are new here, please subscribe to the channel, share the video, like, and humbly, please help me get to 4,000 subscribers. So in today's video, we'll be taking a look at stocks that will be trading this week. We'll take a look at the daily chart to see the levels that will be going in for either a long or short position. So let's get started. The first stock that we'll take a look at today is Robinhood. If you look at the daily chart, Robinhood has been making an incredible move this year. It's up more than 150%, if not 200%. It went all the way up to 155, as you can see on the chart here. And then it's gone down 5 straight trading days. And on Friday, it made the first green candle in 6 trading days. That was Friday. And you can see that the 130 level is some form of a support level, and it held it nicely on Friday. So what we are watching for on Robinhood this week is for the stock to hold above 130. If Robinhood holds above 130, we'll be going in for a long position. But we have to be mindful that the 50-day SMA is very close right here. This is it here. It's around $120. And usually the best, we're trying to push it to the 50-day. So we have to be mindful. If it breaks below 130, we will stay out. So that's the play for Robinhood. The next stock that we'll take a look at is SoFi. So if you look at the chart on SoFi, it's been consolidating nicely, and you can see that every time the stock touches the 50-day SMA, as a red line here, it pushes up. It's done it 2 times in the past couple of weeks. You can see here, after 6 red days, it touched the 50-day SMA. That was around $26. We went in, we moved it all the way up here to almost $30 before the news hit, and then the news hit the market, and the entire market dropped. But even on those drops, as soon as it came back here to the 50-day SMA, it held it nicely again, and it moved back up to around $29. And then another news in the market, it came down back here, and Friday, it held nicely again on the 50-day SMA. So what we are looking for on SoFi is that if this stock holds about $26, ideally, I'd like to see SoFi open on Monday, push a little bit lower to $26, hold the 50 SMA. If it holds the 50 SMA, then we'll be going in. But at the same time, if this holds about 26.70 and we see a lot of volume coming in, we'll be happy to join to the long side. If it breaks below the 50-day SMA, which is around $26, we'll be out because it's proving to be a huge and a strong support zone. And also be mindful that SoFi has an earnings coming in shortly, so we have to be mindful of it. If the earnings, is going to move it one way or the other, so just be mindful of SoFi earnings. And the next one that we will take a look at is NVTS. NVTS. It can be a swing trade. It can be a long-term investment. It also trades very well for day trading. So this stock has made a lot of move in the past couple of weeks, moving from $8.50. You can see right here, I made a video about it a while ago. This stock held at $8.50 nicely, and it pushed with a lot of news. It pushed all the way to $17. It pulled back a little bit with the market. The market, again, is a little bit edgy. So what's the play? The play is to see if this stock is going to hold about $14.50. If this holds about $14.50, we'll be happy to go on the long side for a potential swing trade. This will definitely be a swing trade. If you're also looking for something in the long term, you can also do dollar cost averaging on this and forget about it in the next year or so. And the next one that we'll take a look at is Amazon, AMZN. So the thing is, Amazon is one of the few tech stocks that are looking very, very, very bearish. It doesn't matter what happens, doesn't matter the news. This stock is just gradually dripping down and down and down and down. So what we're gonna watch on Amazon is if this can hold, because we can see that the 210 level is a strong support level. It's a very, very strong support level. And also with the earnings coming in the next week or so, if you hold 210, we'll be happy to start a startup position and go in for a swing trade. But it breaks below 210, this stock has a room to go all the way to 205 and to 200. So Amazon can be on both sides, but with the earnings coming, I'll rather go long if it holds 210. But if it breaks 210 and you have the courage, you can go drive it down to $200. All right, so that's it for Amazon. The next one that we take a look at is NVDA. So NVDA is, just look at the chart, look at the daily chart. This stock is very, very bullish. The chart is extremely bullish. It's like Nobody wants to sell NVIDIA. And it's understandable. The NVIDIA's chart is extremely bullish. NVIDIA's chart is very, very, very bullish. So what we are going to look for NVIDIA is a break of 185. It's being a huge, huge resistance level. 185. If you can see on the chart, on the daily chart, right here, flat top here, tried to break, it couldn't break. Tried, it couldn't break. It tried, it couldn't break. It tried again right here, it couldn't break, right? And last week it came in and it held. I made a video, it was on my watch list last week. I said NVIDIA is strong, is going to hold the 50 SMA. It held it strongly. You can see this red candle here. It held all of it nicely right here. So the play for NVIDIA is a break above 185. If it breaks above 185, we'll be going in for a possible break for another all-time high, 190, 185, 200. This stock is definitely hitting 200 if the earnings comes out. If the earning comes out good, this stock is definitely hitting $200. The next one that we're taking a look at is CMG. So CMG, I like the stock. It has struggled a bit this year. It's down about 30% year to date. I made a video about it when it was around $38 for a swing trade because the $38 level was a strong support area. You can see from here, this is from the previous video that I did. It held it. It pushed all the way back up to $40. It consolidated a little bit around $40. It broke above the 50-day SMA. It held. It tested it a couple of days last week. So a break above $42 for CMG would be something that we would like to take a look at. And it's so down, but the company issued $500 million stock buyback program. So if it holds above $42, we'll be glad to take a look at it and go for a swing trade. You have to be mindful that the 50-day SMA is around $41. So if it breaks below $41, we'll have to wait a little bit and see what it's going to do around that area. And the next one that we'll take a look at is AMD. If you look at this chart, it's also just like NVIDIA. It looks like nobody wants to sell AMD. And also it's very understandable. Last week, OpenAI announced a 10% stake in AMD. If OpenAI, the biggest consumer of semiconductors, are taking 10% stake in AMD, it tells you that there's a belief in it. I'm watching this stock to break above 240. If AMD breaks above 240, if it breaks above 240, we'll definitely be hitting 250, 265. A lot of analysts are pricing this stock at a $300 per share. So if you go by that, there's a lot of room for this one to grow. And again, it will all depend on the earnings that are coming up. So AMD is something that we are also keeping a close eye on this week. And the next one that we'll take a look at is GOOGL. And again, look at the chart. I'm taking a look at all these stocks because the chart looks incredible. I have more than 200 stocks on my watch list. I take a look at them every single day after the market close to see what is going on. And this stock that I've selected this week, I know for sure that the charts are looking incredibly good. I mean, nobody can control any external news that will impact the market one way or the other, like we all saw last week. All we can do is do our technical analysis, right? Do our due diligence and play it safe, be a little bit risk conscious because of how the market is going. But Google, GOOL, is looking extremely bullish. This one is trying to do a flat top breakout. You can see from here that this stock 255, it pull back, 255, it pull back. So if it breaks above 255 with volume and the market aligns, we are going long on GOOGL. Okay, so that's the play. Ideally, you might want to see a break above 255. Let it come back and test the level to make sure that the breakout is legitimate. Don't always go in with the first breakout. It might be a false breakout, as we've seen on several times here. It tried, it broke up, it came back down. It tried again on Thursday, it came back down. On Friday, this looks like a nice hammer candle that it closed on Friday. So let's see. Ideally, give it time. The thing with Google is that it doesn't matter the news, it doesn't matter how bullish this stock is. I've watched this stock several times for a long time to know that it always gives you a chance to enter. If it goes up $10, it will pull back $3, usually pulls back to the VWAP on the 10-15 minutes chart. So if it breaks out, just let it come back and test the level. Give yourself some form of validation before you enter the trade. Okay. So the last but not the least that we will take a look at is PLTR, Palantir, which is another darling stock. And again, just look at the chart, the Palantir chart. This is one thing I like about Palantir. If you go back and look at the daily chart, right? Palantir does this all the time. Look at this area. It will consolidate. It will consolidate. It will consolidate for a long time, usually for a couple of weeks. And then once it breaks out, the breakout is violent. It goes crazy. Yeah, so that's the thing with Palantir. It breaks out and it goes crazy. So I've been seeing this here around 190. It tried it several times. It couldn't break. It looks like a flat top here. If we get this breakout of 190 on PLTR, again, because of false breakout, because of the choppiness in the market, you have to give yourself a little bit of time, be a little bit patient, let it break out, come back and test it, give you some form of validation, see the volume coming in, because usually when it breaks out, people will be caught off guard, right? So there's the scanners, you'll be hitting the scanners, people will be getting the alerts that PLTR is breaking out or any stock is breaking out. So the first breakout, it will catch a lot of traders off guard. So what most people will wait and see is a pullback. Give it a decent pullback. And then once it pull back, it come back, test the level, and it start moving up, right? Then the support becomes a resistance. That's when you go in. You enter the trade, you use that support level as your exit point. If it breaks below it, you are out. It helps you reduce your risk drastically. It's not just PLTR. You can apply this to all your trades. Always wait for a nice pullback into the level that you were looking at. If it breaks above the level, wait for a pullback. It pulls back, it validates the level, and then you get in, use that level as your exit point. If it doesn't pull back, if it doesn't give you a chance for an entry, it's good. You are better saving your money than putting it in a stock on a haste. So that's it for the video today. If this video was helpful to you, please subscribe to the channel, like the video, share, tell a friend to tell a friend. And until next time, let's keep talking money.